Hello everyone. I'm sure most of you noticed Bitcoin went up 5,000 points today from 104,000 almost to 110,000. Indeed, it did top at a slightly above 110. So why did this actually happen? Well, it kind of happened in two ways if we look at the chart here. Essentially, there were two waves of it. It was upward all day, but basically we went up from 320 to about 555, and that basically got us from about 105 to 107, and then we kind of like went up from 107 to 108 throughout the day, and then there was another bump between 350 and roughly 440, where we went up from 108 to about 110, and we've come down slightly since then, but it's still up and down. We'll see if we get another boost in the subsequent hours. Now, why did this actually happen? Well, there was a lot of liquidations on board, leverage liquidations on board yesterday. And it did actually say between yesterday's price of 104 and 114, there was about 15 billion. And then the other way between like 95 and 104, I believe, there was 9 billion. So it could have easily swung either way. But I do actually think people are somewhat optimistic about the numbers that are going to come out on Wednesday, the CPI numbers. And so we started swinging one way. Obviously, that triggered a lot of liquidations. And I think, those two jumps that you saw on the graph were two instances where probably over $1 billion were wiped from shorts or longs. Now, this does not include something crazy like $1.24 billion from like one guy like James Wynn. These were cumulative and a lot of people were stacking and they did get wiped out from there. So essentially we liquidated, I believe, somewhere around $9-10 billion worth of shorts, and that's why we went up so fast. It's losing a bit of steam because if you look at the CoinGlass graph right now on BTC liquidations, you see like where we are right now, there's not a huge amount of liquidations. Yes, there is one at just like, 1110684, but you can see there's a bunch of long liquidations stacked up the other way, not too many short liquidations. That does not mean we are bound to go down. This happens every single time when we have a huge upswing, because obviously when you have a huge upswing, the longs get liquidated and the shorts get liquidated and it takes a while for them to get established. So if we're still in the same price range tomorrow morning, the longs should have actually had some time to get established, and you should see more longs that could actually be liquidated. Obviously, if we start selling off, if people start taking profits, this could be bad. We have a stack here beginning at 108,954 all the way to 108,800. And then we have another big stack here from about 106,875 all the way to about 105,027. So essentially, if we basically drop below 105 again, then that could cascade very, very quickly as well. And it definitely depends on the news and the meetings actually coming out. Now, what are we on about today? Well, right now, the U.S.-China talks, I don't really think the deportations and the stuff in LA really has too much effect on the markets. The China talks and U.S.-China trade policy are going to take center stage. People are just hoping for, at least people in the market are hoping for some kind of deal to be done. I think at this point, they're perfectly fine with us signing pretty much the same exact trade deal that we had with them before. They just want the uncertainty over with, but it does not seem like that's what's going to happen because I think Trump wants to announce that he can get a win. So basically, like, investors are looking for insights on the trade discussions between US and China. Obviously, if the trade falls apart, we are going to be locked in the trade war for much longer, and we might not get a deal by August, which would actually re-kick in the tariffs and bring us back down. Obviously, like, recently trade talks have not gone so well. The only framework we have is with the UK, whom we already had a trade surplus with. And Trump did actually say a couple of years ago that Xi was very hard to work with, signaling that there are big disagreements between the two countries. So we might just go for this 30% extension. Obviously, the increase in prices from places like Walmart, they're not going to hit the CPI numbers tomorrow, really. They only started to increase those prices towards the end of last month. And tomorrow and Wednesday, we are going to get the CPI for me. I think it's going to be around 2.3. I think the projected is 2.4. I also think July's inflation report is going to be significantly higher than June's because one, you're going to see more of the full impact of certain companies actually raising prices at stores for parts and holes that have to be imported. And I think just as importantly, if you look at the worldwide oil price, it's up to 65 now. And it was at 59, like, at the end of May. Now, we are slowly getting back to the price that it was when Trump actually got inaugurated. And this is actually what's been keeping inflation down, I believe, right now, because OPEC did actually promise to produce more. In fact, last week, they said they would actually produce more throughout September. So that'll keep it decently low. But I think as the fear of worldwide recession a little bit subsides a little bit, as Q2 maybe turns up to be not so much recession, oil might actually go up, and that in turn might actually make inflation go up. That's not a very good scenario for crypto and for stocks, because I don't think Jerome Powell is actually going to cut rates in June. And no, I don't think Donald Trump is going to replace Jerome Powell anytime soon as well, because that would cause somewhat of a market crash, and he doesn't want to do that. He doesn't want to be the first president to replace a Fed chairman. And I'm not really sure if he even can do that right now. I don't know if he has the power to really do that, because once you appoint him, you can't actually remove him. That's just one of the quirks of the system, because the Fed is not actually under the executive branch. So the president can't just fire him whenever he wants. So the thing is, like, I don't think Jerome Powell's going to cut rates in June. The market has basically said no chance. And we have a lookout for July. But the July FOMC meeting isn't until the end of July, which means the June inflation report comes out before then. So the June inflation report, I think, like, that's after Walmart, Best Buy, and several of those have already raised their prices. So I think that'll affect it a bit. But if the worldwide recession fears kind of die down, then oil's going to go back up probably to about $70, $71. That's kind of where it was when Trump got into office, and it's been around there for a very, very long time. And I think that will make gas prices creep up a bit. Now, right now around Wisconsin, in Madison at least, it's about $2.75. I think outside in like Sauk City, it's around like $2.96 or so. And I think the oil price going back up to 70 cents will make it about $3 here in Madison, maybe about $3.10, $3.20, like a little bit outside of town. I don't know why, but it's always a little cheaper in Madison than it is around the surrounding areas, mainly because the population's here. I guess like it's easier. It's like a supply hub, so they don't have to like ship it out there or whatever. I'm not really sure why it's less expensive here. It just is. But I do think like gas is going to go up 6-7% on average by the time July rolls around, as inflation fears calm down. Now, if we get to September and then OPEC essentially says we're not producing extra anymore, then gas will probably go back up into the mid 70s, maybe even lower 80s, and then like prices will obviously go up a little bit as well. So we have actually a lot to look at, but I think June is probably going to be the best inflation numbers we see for a while. And if Powell doesn't cut in June, he might have to wait deep into the fall to actually cut. Obviously, Powell is afraid of the instability caused by the tariffs, but several CEOs have actually lowered their chances for a recession in the forecasts, seeing that labor is still fairly strong, spending is still up, and even consumer sentiment has started to improve just a little bit at this point. Now, that could all turn around if inflation starts pumping again. So I think if Powell doesn't cut in June, there's and things work out the way I expect them to, he might not cut in July or September, unless like this trade war just ends by then. Now, there's always a chance that the trade war actually ends by then, that we get some kind of deal, that we sign basically the same deal that we've always had. And I think like if prices actually really start to creep up, like the president won't really have too much of a choice because of public opinion to actually sign some deals just to make the price go down. And those will probably look like the deals that we had before. But as a market person, that really doesn't matter. It might not be a win for the U.S. in terms of trade, but since I really didn't expect to win anyways, that's not really all that important. The important thing is we get stability back in the mix for the market, so the market can actually grab onto that stability and start mooning. And I think if that actually happens, consumer sentiment will actually go up. I think the ETFs for some of the altcoins, some of the more risky projects, will actually get more demand. And with more demand for those ETFs, I do think some alts, if not all alts, can go up. Now, I would actually look at Ethereum right now because right now Bitcoin's not a very good precursor for alt runs. Ethereum might be the one. I'm not really sure. I don't quite believe that. But since I can't look at Bitcoin to see when altcoins are going to run because Bitcoin is just simply outpacing everything right now, Ethereum might be the key because there are a lot of ERC20s, as we've mentioned before. And those ERC20 coins are definitely going to pull up the market some. And if people see hundreds of altcoins go up because of Ethereum goes up, they might actually buy the rest of them. So ERC might have a knock-on effect on SPL and all those other ecosystems. And it definitely has a stronger effect than SPL and all those other ecosystems because when all comes and said and done, there still are more ERC20 tokens than like any or all the other platforms combined. That'll probably start changing in a year or two, but for right now, that's what it is at this point. So keep a watch out on Ethereum, but also notice that if gas goes up, inflation is probably going to go up, and it's not going to be great for the markets unless we get some of those deals signed. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you, and have a nice day.